Now let us look at what do we understand by goodwill, which is actually an intangible asset. When this question is typically asked in class, majority of the students normally answer this as it's a brand value. It also connotates the reputation of the brand or the reputation of the company. We have also seen answers regarding customer loyalty associated with goodwill. Now all these things are fine. When we talk about goodwill, it is actually brand value, reputation, customer loyalty, and all the things associated by making the company's name. So say for example there's a company A, and they started from zero, and they have operated for almost 10 years. So this company would have earned all these things: brand value, reputation, customer loyalty, etc. So do you think that on the balance sheet of company A, we should find a goodwill amount which shows some value associated with it? So if this is the question, I'll just repeat the question. Look at this company A that has done really well in the last 10 years, and they started from zero and earned a lot of reputation, giving good customer service, had earned customer loyalties, and really had brand value. So the real question here is that will you find some amount of goodwill because of what they have done in the past 10 years? The answer here would be a clear no. There would be no goodwill value which will be on the balance sheet of company A, which they have earned in terms of reputation. So what do we really understand by goodwill then in this context? So probably we must rephrase this and call this as accounting goodwill. So instead of calling it as a goodwill, I'll probably refer it as accounting goodwill. And when do you see accounting goodwill on the balance sheet is that whenever a company, say for example company A here, has acquired company B. So there was an acquisition that actually happened. Company A has acquired company B. In this case, you'll note that there would be something called accounting goodwill that gets formed. So only in this situation where company A has acquired other set of companies, here for example company B was acquired by company A. So on the balance sheet of company A you will find accounting goodwill. So let us look at an example of how this is actually created, and in which cases these goodwill numbers can actually come forth. Let us here now take a case of company A that acquires company B. So will that result in some kind of a goodwill? But before that, please note that when we talk about goodwill accounting can be done by two ways. One is called as a pooling method of accounting, and the second one is known as the purchase method of accounting. So we'll discuss both of them, but what we actually see is that when it is about pooling method, there is no goodwill that is formed. However, when we look at purchase method of accounting, goodwill is formed. So we see goodwill because of purchase method of accounting. So we'll look at both the examples and see why there's no goodwill formed here and why there's some goodwill that forms in the purchase method of accounting. So let us take a case where company A is actually acquiring company B. So B is actually a target company and A is acquiring company B. So company B will cease to exist, and the consolidation would actually happen as A plus B. Okay, so this will be the resulting entity. Now let's look at a case where we have the balance sheet of A and we also have been provided the balance sheet of B. Okay, so let's look at quickly what will be their set of balance sheets. Let's create one hypothetical balance sheet for A. On the left hand side we have the assets, on the right hand side we have the liabilities. Let's say current assets is 1000 and the long term assets LTA is 2000 here. So the total assets comes out to be 3000 in this case. And the liabilities, current liability, let's assume it is 500. Long term liability, LTL, let's say this is another 1000. And the third item that comes is the shareholders equity section. So this we can assume is again 1500. The overall total will come out to be again 3000 in this case. So this is the balance sheet for asset A, balance sheet for company A. Let's look at company B and its associated balance sheet. So again on the left hand side we'll draw the assets, liabilities on the right hand side, current assets, let's say this is 200, long term assets, let's say this is 600. So we have a total of total assets is 800 here, and current liabilities, let's say 100, long term liabilities 300, and shareholders equity, let's assume this is 400 here. So what we have is the total, that is 800 on both the sides. So we want to kind of see a scenario which includes both of them, A plus B. So this can be done using the method which is called as pooling method or purchase method. So we'll look at the pooling method first, and then we will look at the purchase method which creates the goodwill accounting.